Guys, let's talk about FET or Fetch AI, or I guess this is now Artificial Superintelligence Alliance. Basically, it's Ocean Protocol, Singularity Net, and Fetch AI all together. But I'm not sure if they have merged or what. I haven't seen Ocean or Singularity Net anywhere, so I'm guessing they have already merged. But I recently saw like Ocean tokens somewhere. I don't know. I don't remember where it was. Doesn't really matter, guys. Let's just get into the analysis here. You can see this downward sloping trend line, and you can see that we got rejected here in May and recently here in August. Now, it looks like we tried, maybe 1, 2, 3, 4 days to kind of break out, and we were unable to do so. Now, we did fall back into this Fibonacci here, and we are still trying to break out of this Fibonacci again, and if we can break out, that would take place at about $1.22. Now, if we were to deal with the trend line today, that would be about $1, let's say $29, $30 would be sure. And yeah, we need to, break out of this trend that we've been in for so long. I think we've been in this trend for many months now. If I zoom out, it's been basically since April, end of March. So yeah, guys, so that's what Fetch AI or the Super Alliance needs to do right now. Now, if we look at Bitcoin, if we look at this on the 4-hour time frame, you can see that we've pretty much just gone sideways for a few days. And yeah, I mean, let's take a look at this on the daily time frame. Yeah, kind of an indecisive candle today. Yesterday it was kind of nice to see that we dropped down quite a bit, but in the end of the day, we pretty much ate all that back up. And a couple of days ago, we got good numbers. We shot up. We just couldn't break this 60.2, and we got close to the 61.3. But, those are the numbers that we need to break. Now, this trend line is coming up. Every day it comes up. If we were to drop down right now, 57.3 basically would be, where this trend line would hit today. Now, the Fibonacci is just maybe another 100, 150 bucks above. So we do have like kind of a zone of support here. If we were to drop down today, which I don't expect we would, it's a Saturday, so not much takes place on the weekends. Now, the economic calendar for next week, basically there's the ISM manufacturing, PMI and prices and things like this on Tuesday. So that's something to, look out for. Wednesday, there is basically JOLTS job openings, which is kind of important. Maybe the factor orders could also be important. Imports, exports might be a little bit important as well. Thursday, we have, again, this PMI from the ISM, non-manufacturing and things, S&P Global Services PMI, non-farm productivity. We have jobless claims again, ADP non-farm employment change. So Thursday is kind of a big day. And then Friday we have, non-farm payrolls, private non-farm payrolls. We got some speakers, we got Williams and Waller speaking. So that's kind of a big day too. So Thursday, Friday again, just like this past week, was quite important. So yeah, keep an eye out for that. Now, the rate cut basically is looking like 70% believing we're going to get a quarter-point cut here, basically in about 19 days. 30% believe in a half-point cut. Still, I believe quarter-point cut is sure. November also, December as well. If we take a look at January, well, still it's about the same. 43% believing we're going to be down at 4.25. Which means we have to have a half-point cut somewhere along the way, whether that's January or, September, November, December. But we'll see, guys. Anyways, guys, that's pretty much all I got for you with FET here. And, yeah, as you can see, we're, stuck under the Fibonacci level here. And we still have to contend with this trend line. So it's basically like Bitcoin. We have to break, above that trend line, which if we were to take a look at this trend line here real quick, that would be about 66.8 if we were to deal with that today. So anyways, guys, that's all I got for you. If you like this video, like, subscribe, activate the bell, and I'll see you guys in the next one.